fourth consecutive days of gains for the Australian share market, and that means we're up every single day this week, and we're up by 3.2% in the week today, and that's more than you get on some term deposits for the whole year or cash management trusts. And I guess what's happening in the market is a lot more positive sentiment around emerging markets, and this is really helping the Aussie dollar. It's helping commodities, and we're seeing that flow through, especially into the materials and the energy side of our market. Today we did see China coming back online, and it was a strong performance, up by 3.8%. But given that markets have performed strongly while China has been on holidays, I guess it did take the shine a little bit off performances around the region. Still, we did manage to hold on to our gains, and we did end up by 0.3%. I have to say that the standout area on the market today was once again the materials and the energy space. We saw iron ore futures over in China up by 3%, and BHP here domestically up by 3%, Rio Tinto up by 1.9%, and Fortescue actually managing a gain of 5.2%. The energy sector also worth a mention, and just in the week today we've seen some phenomenal performances. They are off a very low base, but LNG is up by 42% over the last 4 sessions. Santos has managed a gain of 31%, and AWE has managed a gain of 22%. So certainly some very strong performances in that materials as well as the energy space this week.
Yeah, your thoughts as to whether or not we've seen the bottom for now? Certainly we were discussing yesterday that a lot of traders from a technical perspective believe that we have set a bottom for the year.
I think in the previous sessions we have spoken about how volatility has acted over the last couple of years, the fact that we have seen a spike in volatility in August, September, only to be followed by a pullback in volatility in October, which has been good for returns. And the last couple of years we've seen volatility decreasing by around about 19% for the Australian share market, and the share market rising 4 to about 4.4% in the month of October. So it does look like this is playing out like we have seen in previous years, and that perhaps we will see a rally from October to December. Some of the things that are helping is the fact that we do see a record amount of dividends this quarter being paid, so more than $20 billion, and some of that tends to find its way back to the market, and the fact that we have seen stabilization in terms of commodity prices. Now, the volatility was really, I guess, macro caused, so we are still watching those macro conditions very carefully, but it does look a lot like a lot of that weaker growth story, the global weaker growth story by China has been priced in. Now I guess the key risk is US earnings season, and if we do see a significant slowing down there, then that could point to a slowing down in terms of growth in the US, and that would be a problem that the market would have to deal with.
Looking at some corporate news, Julia, Bank of Queensland, certainly the market liking what they saw. Shares in the end up over 7% for the session.
Great to see Bank of Queensland doing well, and it was an impressive result. Cash profit up by 19%. It was a record above market expectations at $357 million. The full year dividend was also at a record 74 cents. We saw the net interest margin up by 15 basis points, 1.97%, and the cash return on equity, the highest that we've seen in years, at 11.2%. So tick, 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 tick. All things seem to be going in the right direction. I guess on the risk side, the portfolio, the loans, still around about 50% come out of Queensland, and we know that both Queensland and WA are doing it tough because of what's happening in terms of the mining space. But the fact that we have seen a little bit of a levelling off in terms of the playing field around mortgages and the risk weights with the mortgages in the regionals versus the big four, I think a real positive for the regional banks, and we have seen capital raisings for those big four banks. So Bank of Queensland, a good result today. Hopefully some of that momentum can continue, because some of the areas where it does lag behind are in things like investor-related mortgage loans, so investor home loans. So that's one of the areas where it probably does need to pick up pace, but altogether it does look like things slowly starting to build some momentum in some key areas.
Martin, your thoughts? Does it match up as being a good precursor as to what's to come?
Look, October has typically been one of the better months of the year rather than the worst, despite the 1987 stock market crash, the Asian currency crisis happening around that time, and of course the 2007 global financial crisis kicking off on the 1st of November, just after October has finished. But October does generally tend to be a better performance. And I think part of that in Australia has to do with when dividends are being paid and some of those dividend reinvestment plans also kicking in. So I think here in Australia, it typically has been the start of an easing off in terms of volatility. Hopefully we'll see that through. Having said that, if we do see a significant change in the global macro conditions, then override some of those typical seasonal factors that do come into play, and you'll see investors becoming fearful again and selling out of portfolios. So there is a seasonality effect, but I think the key risk to markets at the moment is the global macro conditions. And if we do see a significant change in that, then that's really going to drive the direction of the market short term.
Just quickly,